So, hello, and good evening to everyone present over here. And I welcome you all to the inaugural session of Cifer. So, today we are here gathered not just as a club, but as a community driven by shared experience and passion for understanding finance and analytics. Cifer, which stands for Club of Investment, Finance and Economic Research, is a platform for students and professionals alike to delve into fascinating realms of finance market, economic trends, data analysis, and much more. The world we are in today is becoming increasingly data driven, don't you think? And the understanding of complexities of finance and analytics is becoming much more cruel than ever. Financial decisions made by individuals, organizations, and even nations have a profound impact on our daily lives. I hope you all agree with me on this. And analyzing data trends not really helps one just making good choices, but it also paves our path to becoming better individuals and knowing what to do with our money. And to giving more insights on what Cypher actually does, I'd like to, call out Ashutosh to give out some introduction on our club. Ashutosh.
Sorry, guys. Good evening to all the dignitaries present here in the meeting today. Thank you for your kind audience, which is quite pivotal in the realization of our resolve towards making an ecosystem where our action results in elevating our financial intellect, which has now ascertained itself as a prerequisite to flourish across the stream spectrum in today's dynamic society. Our generation serves as the much needed ally for the transition for the ideas of generation, where the financial intellect was painfully restricted to its sheer diminishing and constricted stakeholders. Where our previous generation and their ideas refused to incorporate an environment where this discipline could find itself as a recourse for upliftment of one's daily life, as we all know that, as Theodore Roosevelt once said, that it is our method of conservation of resources and its proper utilization that constitutes a nation's problem. Moreover, in this light, our aptitude towards understanding of the financial flora is demanding than ever. Engaging in this ever changing ecosystem without a sense of reliance, we will be forcing ourselves into a world of speculation without a yardstick. In our conceived preposition, with the help of all the dignitaries, with the name of our club cipher, we here in our limited and humble capacity pledge to decrypt the ever escalating variabilities, externalities, even in the mere realization of ecosystem of informed cloud of people engaging in proliferation of dream of a financially stable future. Thank you, guys.
Thank you so much, Ashutosh. That was really nice. And to guide us in this journey and share her valuable insights, we are honored to have with us Dr. M. Thenmozhi, who is a professor and HOD at our own prestigious IIT Madras University. And she is an expert in the field of finance and has made significant contributions and to the research and education. We are truly fortunate to have you with us, ma'am. And we would be really thankful to you if you could, share some insights with us.
So, good evening, and I'm very happy to be part of this program and then try to interact with you today. Prachi and Ashutosh and all others assembled here today. I've been working in the area of finance for about nearly more than 35 years. And my journey of financial analytics, I could say that it started specifically from where I started looking in terms of understanding how I can apply analytics and to understand the capital market much better. So my journey began by way of exploring the stock market first and trying to see what's happening in the stock market. And I think after some time, I just moved on to looking at in terms of what can be done to understand the changes that are happening in the bond market. And then with the development of the commodity markets, I started looking in terms of what can be done with respect to the commodity markets also. So as the financial markets were also moving forward in our country, I think my interest also was changing, and I was just trying to see in terms of how to do some financial analytics in all these markets. Particularly, I've been working more in terms of the market area, where I've also started focusing in terms of financial modeling and forecasting. My interest initially was more to look at in terms of time series analysis and time series forecasting. And then later on, I started looking in terms of developing structural models and also trying to develop linear and non-linear models, which can be used for the purpose of predicting the stock prices. And also trying to see in terms of how these models can be applied for investment decision making. So that has been my interest and journey. But maybe based on what is of interest to you, I can try to share specific puts with you. But also I thought today, maybe I was not sure what should be I focus on today's session. So I was just thinking in terms of, recent times I've been looking in terms of how fintech is having an impact on the markets. And maybe I thought I can share some of those points with you. Is that fine?
That would be great, ma'am.
Okay. So maybe I'll just share the screen now. I just use that thing. Can you see my slide?
Yes, ma'am.
Yeah. So maybe in recent times, what I find is fintech is bringing a lot of change the way the financial markets are moving, and it's providing a lot of opportunities for you to understand and do some analysis also here. So maybe just try to look at in terms of how this is changing the market. Yeah. More commonly, fintech is known as the emergence of new technology used to improve the financial services here. And right now, I think all of you must be familiar that blockchain technology is bringing a big change in the financial sector. Particularly, a lot of back office technological services is also undergoing a lot of change. And the most important thing what we find is making use of artificial intelligence and machine learning tools is providing a way by which transforms the way organizations, banks, or mutual funds, the way they interact with the various types of customers. Whether it is individual investors or whether it is going to be corporate investors, I think now this is brought in a lot of change in the way you try to provide information and also try to advise the customers also there again. Of course, as you also look, if you look at the industrial revolution, I think we are on the brink of the fourth industrial revolution here. And basically what you find is that, and of course, when you see it is built on the third revolution, and we started looking in terms of how the various developments are in the technological developments are trying to change the way things are happening in the economy also. Particularly because looking in terms of the financial sector, I think artificial intelligence, neural networks, deep learning, fintech and blockchains are some of the things that are having a significant impact in the context of the fourth industrial revolution here. And what is more interesting is earlier, if any change happens, it takes time for you to see the effect. But nowadays, because of these developments and the changes, what we find that is the changes are occurring at an exponential rate rather than at a linear rate. Yeah. I think that's what you must see now. That's why you must always keep observing what are the fintech development, what are the AI developments that are happening, because the impact of that is going to be much more faster and quicker than the earlier other developmental impacts here. So there's been exponential increase both in terms of size and significance of these innovations here, and particularly those influencing the financial sector. So is there anything which I have to see in this one? Yeah. So there's a lot of messages. I'm not following. If anything is there, please tell me. Are you all with me?
Yes, ma'am, we are.
Yeah, fine. Okay, fine. And IoT is also having an impact in the way things are happening, particularly in the financial sector. But what I thought is in the context of I thought we can only see in terms of how this is related to retail investors. You and I have been can invest in the market individually here, but how is this fintech and the developments of AI is having an impact here? And then few recent developments that you can see is that the number of retail investors in the market, the individual investors in the market, in the capital market, has actually increased here. NSE has been claiming that they have added nearly about National Stock Exchange, more than nearly 90 lakh new investors during the financial year of 2021. I mean, in 1 year. I think that is particularly during the COVID period. I think it has also motivated several individuals and started, probably they had more time compared to that of the earlier times here. And they started looking in terms of if they can make investments in the capital markets. And as there's a lot of new investors have emerged. Earlier, there will not be many individual investors, but now I think India is witnessing a boom of retail traders and investors in the capital markets. And as you all know, that National Stock Exchange has got the highest volume of trading. 45% share in the overall trading turnover is on the National Stock Exchange here. Earlier it was lower, but now I think most of the trades happen in the National Stock Exchange. And interestingly, earlier when you look in terms of those who are operating in the market, it was foreign institutional investors, companies, or proprietary traders, and domestic institutional investors. But now it is retail participants are much, much ahead of these groups here again. So I think if you look at it, the retail investors are making a big change. So in this context, only we find that the role of AI or the machine learning is going to have a big impact, because retail investors would like to have advisory services, and they may also be keen to look at in terms of AI-based models for providing them some advice here. Proprietary traders, basically those who are proprietors, they are the stockbrokers who sometimes when you look in terms of stockbrokers, they trade for their purposes or for the customers also. Yeah? But what we find is over a period of time, they are the main segment who actually operate in the stock market here. But then if you look at the retail investors, they are operating both in the stock market and as well as in the derivative market. I'm not sure whether every one of you are familiar with the derivative segment. See, when it comes to financial markets, one is the stock market and the other one is the capital stock market. And there in the stock market, you find that we also have the derivatives market, which have been derivatives is products, derivative instruments are those products which have been developed based on an underlying instrument. For example, you have the national and Nifty index is there. So based on the Nifty index, we have created a Nifty futures. It's a derivative product. Similarly, based on Nifty index, we have the Nifty options are there. Similarly, for every stock, okay, for Infosys, stock is there. We have Infosys options are there, Infosys futures are there. So based on the underlying stock, this instrument is getting its value and the prices keep changing there. Derivatives market basically have been introduced in any economy, basically to move all the speculators from the main stock exchange to the derivative segment here, so that the stock market will be more stable enough here. And now what we find in the case of the retail investors is that they are actually leading the derivatives market also. Not only in the stock market, but also in the derivative segment, we find that more and more investors have started, retail investors have started operating here. But of course, when you see, if anybody is operating in the derivative market, they're taking more risk. And I said this means that the retail investors are willing to take more risk and operate in this particular market here. So one of the important trends that we find is increasing retail investors here. And if you look at in terms of the investors' participation in the capital market, the financial stock exchange, as you will see here, the type of categories of people who are there here. Individual investors has been from 33% has become 45% here. And if you also look at, that's a big jump compared to that of the others here, and what has declined here. As you see, FIIs have declined, foreign institutional investors actually has declined. And of course, you can also see in terms of corporates there's been ups and downs, but not much. Maybe 1/4 is a corporate segment there still. And you can also see that in the case of domestic institutional investors here again, it has not been around, it has been around 10% and it's actually still come down also here. Look in terms of the participation of different types of investors in the market. So if you're thinking, if you're thinking in terms of can I make use of any AI tools or machine learning models, I think targeting the individual investors group is a good thing. If I can come up with something which will serve this particular segment, I think it will be an interesting thing which will be well received also here again. So while we're looking at the trend, I think this gives you a lot of insights in terms of there's a lot of scope and is actually increasing further. And also, if you see in terms of, if you suppose, I don't know how many of you are having operating in the stock market. Is there anybody who's just operating in the stock market who already has? Any of you? No one in the chat? Yeah. Okay. Some of you are there. Yeah. So since some of you are already there, you know that if you want to operate in the stock market as a retail investor, you need to have a demat account. And we can also see that the number of demat accounts are also going to increase over a period of time. And as you see that the COVID period has provided an opportunity for investors to invest in good quality stocks at a cheaper price here again. And another reason why we also find this many office goers working from home was able to save a lot of time and they could analyze companies and they started investing for the long term also. And another reason which I wanted you to look at is the developments of fintech and as well as other apps like the use of investment apps and digital platforms have given an additional push to it. And as a result, what we find is the number of demat accounts that have been opened has only been increasing nowadays. And the interest on the financial market is also increasing. And the most interesting thing is what we find is young investors, are they increasing? Who are the type of people who are actually now investing? I think we need to understand this because this will also give you an idea in terms of which is the group which is now emerging as a big investment group here again. So as you will see, for investors under the age of 30 make up for more than 2/3 of the users. So which I think many of you will fall into this category. 18 to 24 comprise about 33% here again. Young millennials contribute about nearly about 37% of the investor base. So as you can see that nearly this under the age group of 30, nearly about 2/3 of the users are in this particular age group who are operating in the market here. So this is the reason why you also find there's a lot of scope for application of technology and as well as making use of AI for the purpose of targeting this particular segment. So everybody is trying to come up with ways and means to attack this segment and cater to the needs of this particular segment here again. For example, in this Grove report 2020, James says that there has been a marked shift in the average age of investments. While earlier generations started investing well into the mid-30s, millennials started to invest as early as mid-early 20s here again. So this is really good. That youngsters are now started looking in terms of trying to invest in the market. And the earlier you start, as you all see, some of you are doing it, you find that it's also good. You learn from by way of investing, you make mistakes, and then you correct yourself, and then start knowing what should be done and what should not be done. And as a result, investments, the early investors start getting a lot of benefits over a period of time here.
I'm taking in account what you just said. For those some of us who are like not really acquainted with knowing what to do and like how shall one start investing and how much risk should one take if it's your early times of investing, what would you want to say to those people?
Okay, those who wanted to invest here, how do they go about beginning with it? I think I think what makes youngsters actually attractive to investment is just to buy and sell and make some quick profits here again. But of course, apart from looking at speculation, I think what you should look at investments also. Maybe one proportion of it you start investing, and when you want to make an investment, first understand the fundamentals of the company. So while choosing the script, One is the market movement, technical analysis. All these people come up with a lot of graphs and things which gives you a lot of insights. Technical charts are also there. But before getting into it, you must be strong in your fundamentals here. Yeah. When I mean fundamentals, look at the financial performance of the company and understand the balance sheet, the profit and loss account of the company, and then look at the cash flows of the company, and then analyze them for a period of 10 years. I think if any look at in terms of, are they consistent? Are the fundamentals strong? What has been the return that they have been providing? So maybe initially, but particularly for those of beginning, I think you should look at terms of companies which are consistent and providing a regular constant return. I think rather than companies where there's a lot of ups and downs, they don't have a pattern of providing any returns. And there's been a change in the performance very drastically, then in that case, don't take risk at the initial period. Maybe later on, when you understand the company and the segments, the type of projects they are in, then it may be easy for you to look at that. But in the initial periods, I would suggest that first focus on the fundamentals of the company. Choose some 5 to 10 companies which are really good, invest, and then keep it there. But still, if you wanted to make some quick returns by way of looking at it, but also choose companies which have been operating well, doing well. Our performance is also good. They have been providing good rate of return also. See, when I am investing, I am buying the share in the stock market at the market price. So what is the return that I'm going to get is a dividend, and sometimes they give you capital appreciation also. So what is the rate of return that I'm going to get from my investment? So you can also see what has been the pattern, and this is a growing company. Look at the price earning ratio. If the price earning ratio is good, then in that case, it indicates one thing is that is what is the price earning ratio? Basically, it tells the ratio of what is the market price per share and what is link it to the earnings per share. So if a company is making a profit of about, say, 10 rupees per share, and if the market price is about, say, 30 rupees per share. So earnings per share, and if you start linking it to the market price per share, every 1 rupee of earnings, and the market perceives to be, it is really worth 3 rupees here. So that's what the price earning ratio tells you. So when you understand that, the greater it is, though it is only 1 rupee earnings, the market perceives to be much more worth here. Then in that case, it's a growing company. When will the market perceive it to be much greater than what it's worth is only when it is a growing company. So if the price earning ratio is higher, we always see that it's a good company. There's a lot of opportunities of growth for this particular company there again. So maybe you should also look at that and then try to see in terms of whether choose companies. Sometimes if the PE ratio of 15 is there, I can always say it's a good and a growing company. And then you can choose such type of companies for making your investments in the industry. Of course, there's nothing like a formula which you can follow for investments. But maybe initially, if some of you are not sure, I don't want to take any risk in making investments, then in that case, begin with a notional investment. Open the Excel sheet with your notional money. Start investing using, if suppose you're investing and look and observe in terms of what is the trend, what is the gain, what is the loss that you're making over a period of 1 year, and then understand the mistakes, and then correct yourself, and then start investing in reality also. But it's always good to make mistakes in the initial period. But something because it means that it will also prepare you that we're always happy when we make profits, but then when we make a loss, we feel very unhappy. And sometimes I've seen investors that when the market price increases, they're happy. They would not have sold it. But still, when you look at the prices increase, it's a notional satisfaction, no? That I have a script and I bought it at, say, about 40 rupees, but today it is about 50 rupees. I feel very happy. My investment is appreciating that. And then if it comes down, you also start feeling sad. Okay, the value of my investment is actually coming down. It's a notional one. So every day in the morning, when you look at the newspaper and then see in terms of course, your in the mobile phone itself, now you can just see. When you see what the price of the script is increasing or decreasing, it has an impact on you also. We keep observing what's happening with respect to this. So the changes that are there. But you can also first initially begin with the notional one, and then later on you can start experimenting it and learn from the mistakes again. And then you'll also know how to go about making your investments. Anyway, this is my brief answer. Is it fine? Okay.
Yes, ma'am. I believe this would be really helpful for a lot of us who are like planning to start
Mm.
investing and not knowing what to do.
Yeah. I think we have also stood some of sometimes our own students also. No? Sometimes each one of them put some money, and as a group also they invest. Initially, we don't have much funds, but then a small token, each everybody puts some money. Then they discuss every day. You can also, you can form into subgroups because it's a club there. I think all of you can form into small groups and then put in some funds also, and then invest as a group also, and then see in terms of what happens over a period of 1 year. And then I think this is a good way to try to learn and understand also how to make the investments and what's happening when the price changes, when the price doesn't change at all, and how long the effect is there. See, for certain things, you find the effect is going to be there for the change in the price will be for a short period, but certain things you find that the effect will be there for a longer period also. So, and also it depends on whether you want to make investments for making quick short returns or for a longer return. Based on the strategy will be different here. So you may have also first decide what is your investment objective. So whether you want to look in terms of consistent returns and also or you want to make some short-term gains by way of buying and selling the scripts, then the strategy is different. Or maybe some of you who are working, then in that case, I would advise that a proportion of it you can have in long-term investment, and then the small portion you can try and experiment in doing the trading part also. Some of you can also look at in terms of, okay, I don't want to buy in the stock market, but when a company is coming up with an issue of securities, I can subscribe for it and then buy. So identify those companies. Normally, if you're interested, if I think next time when you see any company coming up with the issue of shares, as you will see here, the issue of shares may be for public. IPO is the first public offer, and follow-on is then later on second following public offer. And rights issue is issue only for the existing shareholders. So if you don't have a share, you cannot subscribe for this one there again. And what we find is, for example, when you look at in terms of issues here, I think over a period of time, in the initial number of companies to come up with the issue of number of issues made and then how much amount that has been raised. I think for some time, it's 11 to 12, 12, 13, 13, 14, 14, 15, all the amount they raise is a little less. But subsequently, from 15, 16, actually, we start see that it's been increasing. And 17, 18 is very high. Funds that have been mobilized is quite nearly about 78,000 crores is there. And again, 19, 20. And we find that, so it also shows the companies have mobilized funds by way of coming up issue of shares and then raising the funds here again. So equity issue is here, and then those which are public, rights issue, listed, IPO and IPOs, and then instruments also at par premium, how many have issued at the face value and how many have issued at a premium over the face value of the shares. The real purpose, I think, what you can see here is now is over a period of time, the number of issues that have been made has actually been increasing, and in these 3 years, it has been quite high. But here the number is less, but the amount raised is actually increasing. So what we observe in recent times, what have we find that is the number of companies coming up with the issue of securities is less, but the amount that they're raising is quite high. So if you wanted to subscribe, you want to make an investment in any of these issues, what you should look at is first go to the SEBI website and the Securities Exchange Board of India website. There, whenever any company wants to come up with an issue, first they give their proposal document and then say what is the purpose, what is the issue that they're going to do, what is the amount that they're going to raise, what is the purpose for which they're raising it. So the purpose may be for starting up a new project, expansion, or sometimes now in recent times, particularly many private organizations, when they come with this IPOs, and I know a lot of even our own alumni also, many of them start business, do business for a long period of time. They never take the money from the company. In any business, the profits, who's entitled to the profits? it is the owners. So the entire profits can be distributed to the owners. But then every year you make profits, but you don't take that money. You allow the money to be with the company itself. So if the owners are not taking the money, what happens is it becomes reserves and surplus. So what is the owner's funds that is there in a company will be both the capital that they have invested plus the undistributed profits. The undistributed profits is nothing but the reserves and surplus. So the total of this is going to be the owner's funds that is available in the company. And over a period of time, sometimes what we find is the capital may be just a small amount, but the undistributed profits over a period of time will run to several crores also. Yeah. There are many companies like that. But then it still belongs to the owners. But then at one point in time, the owners would like to get some benefits. So sometimes in recent times, I think in the last 2-3 years, if you start looking at why companies are coming up with the issue of new shares, is that is the proceedings of that particular funds that they've raised, part of it will be used to pay to the owners themselves. The owners have, say, a lot of shares. Now, maybe now they wanted to sell it off and then give it to the individual retail investors there. So maybe you can also look at in terms of such type of companies where they have developed it over a period of time and then they're doing it. And then now, and it's a good, and if you also see in terms of how well they are performing, then in that case, you can also subscribe to these type of issues rather than going to the stock market and then buying it also. So basically the point I want you to look at is you can either go in for investing in the stock market through the stock exchange, or you can also invest whenever the companies come up with the issue of securities, maybe equity issue of equity shares there. Okay, are you all with me?
Yes, ma'am, we sure are.
Okay. So there's another option that you can look at. So not only issue of securities here, but you also see in recent times that companies can also raise funds by issue of bonds also. So what's the difference by way of investing in a bond and investing in an equity share? Bond is a debt instrument which has got a particular face value and has got a fixed interest rate. So companies, when they issue a bond, or some government companies call it as a bond, and private companies call it as a debenture. So it's actually got a particular face value, and it has got a time period for which the bond is going to be issued, and then it's also got a fixed interest rate. Now, mostly it is fixed interest rate. So here the return is that as an investor that you're going to get is only by way of investing in the bonds here. You get the interest as a return, and then on the maturity date, you'll be getting the entire principal amount. Sometimes if it is a convertible bond, then the bond may be, if you exercise the option for conversion, it will get converted into a share then. And if you see recent times, I think the number of bonds that have been issued, corporate bonds, has not been high, but the number has been less. But interestingly, what we find is the amount that has been raised is quite higher, but not as high as the case of shares, equity shares. So this also shows that companies are not very keen to mobilize funds from the public, particularly for retail investment, by way of issuing bonds, but they're more keen to come up with the issue of shares. Why does a company prefer to issue a share over a bond? What do you think will be the reason? The reasons for this? Is there anyone like to give me an answer? Yeah. Why companies are willing to come up with the issue of a bond instead of a? Let's see some answers here. Okay. No idea. Okay. See, basically, a company can mobilize funds for their investments either by way of issuing a equity instrument. Equity is the owner's instrument. So whenever you're buying a share, you become an owner. But when you're buying a bond, you become a lender to the company. And when it comes to borrowing, when it comes to bonds, the return is going to be interest, because the risk that the lender is going to take is lower, but the risk that the owner is going to take is going to be higher. So the rate of dividend that is going to be paid is going to be more, if you are investing in the shares. But whereas if you're investing in a bond or a debenture, the return that you're going to get is going to be lower here again, because the risk that you're going to take is also lower. So as an investor, you find that the more greater the risk, I'm looking for more returns, isn't it? So if you are going to invest in the stock, in the shares, whenever there's any public issue, then in that case, normally your expected rate of return is much greater than the expected rate of return with respect to when you're investing in a debenture or a bond here. I'm just trying to see. Yeah, trusteeship is the main cat. Yeah, it's also true. You form a trust with respect to a bond and then they manage it here again. But of course, in terms of safety, which is better? So if you're a person who are not very good at understanding in terms of how well the company is performing, and you don't want to take risk whether this company will give me a dividend or not, then in that case, you can go in for these type of instruments because you're sure that you'll be getting a certain rate of return. Of course, if you have some savings and if you put it in the fixed deposit in a bank, you may be getting nowadays, it's about 6.5% is what is the interest rate that you get. Maybe it only matches your inflation or no. So maybe if you're going to invest in the bond, I'm taking a little more risk here. So I'm looking for a greater return. So they're going to give me the same 7 or 8%. It's not worthwhile for me to invest it here. So I'm looking for those bonds or debentures which give me an interest rate greater than the bank fixed deposit rate. Then it makes more sense. Similarly, if I'm investing in the share, I'm looking for a return greater than the interest rate on the debentures or the bonds. One more thing also is another source where you can also invest in the mutual funds also. So mutual funds is another segment where you can make investment. What are mutual funds? If suppose some of you are not sure in terms of which company should I invest and what type of securities I invest in, we have institutions which will invest on your behalf where you put in the money. Sometimes you can also go in for an SIP where every month you put in you can even deposit even for rupees 500s. In 500s, you can deposit the money and they will invest on your behalf and give you a return. And you can also make a choice and then say whether you want to invest in growth funds or income funds or in terms of risk-free funds, what type of funds. So each and every fund, mutual fund will indicate the scheme and where the investments will be made. So based on your requirement, you can choose the particular fund and then provide the investment by the units of those funds. And later on, as and when you want, you can also dispose it out and also look forward to the returns by way of making this investment here. And interestingly, as you see, look at the volume of investment that is there. A huge investment is made. But of course, in relation to that of the developed markets like US, investments in mutual funds is less. But in recent times, you find that, as you can also see, there's been a big increase in the amount of funds that is being invested in the mutual funds over the time. So how much of funds have been mobilized, how much have been redeemed, and how much have come in both funds, investment as well as redemption is there. Both are there. So what is the total amount of funds that is there in the mutual funds each year? You find that it's actually several crores here again. So you can, if you're looking at investments, maybe you can look at investing in buying shares or in bonds and debentures, or if you're not very comfortable in making analysis of the various companies, understanding where to invest, etc., choose mutual funds. And then you can also choose those funds which have been existing. There's an open fund, or sometimes they have a time limit in which you can invest. But there are other funds which have been existing for quite some time. You can also see in terms of how they have grown and then they start giving a return. And as young investors, I'll always advise the earlier you start having an SIP, systematic investment plan, where you start putting in small funds periodically, you'll find that this will actually grow to a very large amount later on. So in that sense, even if you are investing in other securities, I request each one of you to have your SIP, a systematic investment fund plan, and then start investing even for rupees 500 per month. I think you must be having some savings as a student, but then still, I think start investing it, and that's a good way to begin making the investments and then and you don't take back that money and then you wait for the money to grow. But of course, choose the right plan where you wanted to invest and then invest. There are several types of schemes are there. Maybe you can look at in terms of what is the type of scheme, what is the purpose, and then also see in terms of what has been the returns that we have been generating over a period of time, and then look and then make your investments here. Okay. So what we see, I think what I was just trying to look at here is that what are the various possible ways of making an investments here. So is this fine? So how much time do I have more to discuss? Rachi or Ashutosh, can you tell me?
So none of us like want this to get over, but
So
yeah, we still like though none of us want this session to be over anytime soon, but yeah, we still have quite some time. So yeah, you can continue. Yeah.
So can I take another 5-10 minutes? Is it fine?
Yeah, sure, ma'am.
Okay. So results also looking at in terms of the fintech has been making a change in the way the retail investors can participate, and we also see a lot of fintech products also emerging. So it's not only making investment. When it comes to fintech, either you can be an investor or you can also come up with a product also here again. That's what is opportunity available here. So technology and innovation is trying to change the way the traditional financial methods were there, and now it is it's an emerging industry, and all the developments and technology is being used for improving the activities in finance here again. And the most interesting, as you see, fintech is redefining the way the people store, save, borrow, invest, and spend and protect money. I think this is something which we find, but sometimes over a period of time, we are quite amazed type of changes that are happening, but the youngsters can definitely follow. And now everything is there in our hand, in the smartphone itself, the mobile banking, investing, borrowing. And of course, now we also see in terms of not only buying shares, bonds, but even you can start looking in terms of investing in crypto also, cryptocurrency. Though in India, it's not legally permitted, and RBI is also thinking of its own cryptocurrency. But still, I know a lot of investors are actually investing in crypto, but they don't know. There's too much of risk there if you're investing in crypto also. And in recent times, what I find is a lot of startups are also there, which are coming up and trying to cater to this particular segment. The developments in technology has also provided ways by which you can come up with new startups to cater to the needs of the retail investors here. For example, we can just see that more than 50 billion has been invested in almost 2,500 fintech companies after 2010. Of course, China and US is the hub of fintech startups and companies, and what we find is India is the most active fintech market here in the worldwide. And in recent times, the government, both the central governments and the state governments, are quite encouraging to try to see in terms of how this segment can actually grow. That's what we find here. So some of the fintech applications that you see is a lot of offerings that are there in the market. Some of them just highlighting a few of them here for you. One is peer-to-peer lending. We call it as P2P lending here. It's an online platform through which anybody can apply for a loan and then. So it's very popular in recent years. Earlier, if you have to get a loan, you have to go to the bank and then fulfill. Now, if suppose you would like to lend money also, you can become part of the system and lend money. Of course, you have to come up with the requirements and norms, assess in terms of who is the person who's borrowing, whether they'll make the payment or not, etc. And then take a decision. So peer-to-peer lending is becoming very popular because of this. Another one is crowdfunding. Similar to P2P, crowdfunding is emerging as an alternative. It means that if anyone is looking for funds, it's not necessarily that it should come from one person, and it can also be in smaller amounts also. A group of people or several people can contribute for the particular project in a small, depending on what they can afford to contribute also. So there are several people who are going to coming together and then fund the project here again. That's what happens in crowdfunding. Then a lot of mobile payment apps. I think I need not tell about it to you. All of you are very much aware of it. And right now, I know everybody just only uses the phone of making payment, and nobody carries cash also. This becomes so very popular here. And in India, you find that almost everybody, not only in terms of tech savvy, but I go and see even like a small fruit seller or a vegetable seller or a flowers seller. Everybody is now become very tech savvy and uses the mobile payment options. We also have developments of using AI and tech as a forex platforms also. Particularly when you wanted to buy any foreign currency, then in that case you can also make use of this type of platforms. Trading platforms are also, I think those are many of you are operating is having a demat account and then deciding to buy or sell. I think different trading platforms are there where they normally charge you fees. And another thing is it will give you access to you from wherever you are also. Earlier and all, if you want to make investment, you have to approach a broker. And then only through the stockbroker, then you have to make the investments. But nowadays it's not necessary. You can go in for direct investment also. In the process, the commission that you're going to pay to the broker will actually is going to be saved by you there. If you look at in the P2P segment, just trying to give you some examples of companies. The fintech ecosystem has been growing in India. The online services are there, like Lendbox, Faircent, I2I Funding, Shiksha, Gyandan, and Market Finance is there. So there are plenty. And for payment services, I think you can also see that many of them actually link to the bank account so that it is more secure here again. But what is lot nowadays, every private individuals and all business started accepting the payments on the mobile without having any accounts also. Without any need to have any merchant accounts. So transfers are made directly to the bank account linked to the PE so that it is more secure. One important caution is if some of you are coming up with developing some new payment options, etc. I think in this case, you can use the technology in such a way that it takes care of security also, because it should protect against the fraud there. Remittances also, I said, earlier it used to be very difficult if you want to remit money abroad, and sometimes children are studying there or their relatives are doing some courses there, we need to transfer some funds. But now Western Union and all, and MoneyGram, they make it very easy for you to transfer the funds also. So now here for that, they were actually having a monopoly, but a lot of new fintech companies have come in, which are making it much more easier for both for receiving funds and as well as for remitting funds outside the country. We also have new fintech companies which are focused targeting the personal finance or retail investment services also. They provide customized services. It may be to provide information or maybe for services also. They provide advice on how to save, how to manage or invest, like Funds India, Skipbox, Policy Bazaar, Bank Bazaar. So earlier, if you want to take an insurance policy cover, you have to go to a company. But now with Policy Bazaar is there, I think it all happens in a day, and then you can, about 20 minutes, you can get the policy also printed here. A lot of other sectors also been affected with the developments in fintech. Just to highlight some of them, I thought is interesting is, of course, cloud computing and technology solutions are there, which enable you to have better access to all the financial products and even store all the things that you want. But what we find is a lot of online accounting software is coming, making it connecting buyers and sellers in different industries. For example, Catalyst Labs are trying to connect all those in the agriculture sector. Airtime app is providing village retailers and also enable them to do mobile top-ups. FT Cash basically offers payments and promotions to customers through the mobile-based platform. Profit Books is an online accounting software designed for non-accountants, so it helps us to understand and estimate what is the profits and earnings. Soki and Hummingbird. So we find that a lot of accounting-based software available for different types of segments. Earlier, it always accounting means for only for a company, etc. But now It's for village retailers, it is for agriculture sectors, for SMEs. You find that a lot of small new options, apps have also come in, which one can subscribe and then make use of it. Even for equity funding also, whenever you have any project and you require funds, but even if it's a high risky venture, then in that case, you can go in for crowdfunding platforms and raise the funds there. We also have internet mediated platforms like Keto, Wishberry, and Star 51. They also provide some venture capital. And of course, they're basically targeting out the new ones, the risky ventures, which are early stage of the business. We also see a lot of, I think you might have been tempted to also invest in the cryptocurrency. Is basically a digital financial currency such as Bitcoin. And now, there are several types of cryptocurrencies out there which have been very actively traded in the market here again. And we also have Bitcoin exchange startups present in India, Coin Secure and ZPay are also there. One more thing which you also observe is, respect to the lending process, where this innovation and technology is uses. We have machine learning algorithms for the purpose with respect to trying to understand the social media footprints, call records, shopping histories, payments, and utility services. And I think all of you know, when you choose one option in Amazon and make a purchase, you will have suggested what others would have bought. Those who bought this will also have bought these products also. So basically, machine learning algorithms try to analyze the customers, the shopping practices, and then tries to provide you some additional information which may be useful to you. HDFC and Axis have launched mobile phone applications to do digital transactions. Of course, not every bank now has got their own mobile apps here. Federal Bank has announced a partnership with Startup Village to develop innovative banking products. See, nowadays what happens is new products catering to a small segment also. Not necessarily, it was always common ones, but they're coming up with new innovative financial instruments to cater to small segments. And then Barclays is the 5th Global FinTech Innovation Center located in India here. And Goldman Sachs, Principal Strategic Investment Group, they invest in the Middle East financial startup scene. So we find a lot of interest by other organizations also to invest in these FinTech startups here. RBI is also coming up with, it's focusing on the FinTech here. Of course, they wanted to see whether, of course, look at in terms of cryptocurrency bill. But of course, right now there is a ban, and we hope that they have also introduced the digital currency, and we are trying to. This thing, of course, we are trying to take small steps with respect to the cryptocurrency trading there again. And another major thing is the startup sector. I think FinTech development has actually empowered basically the opportunity for many individuals to come up with the FinTech ventures. There are several FinTech startups that are there. And to encourage we don't know how many of them are really going to be successful here, but at least a lot of new ideas, new opportunities have come in. And the entrepreneurs are now trying to see in terms of how to make use of this favorable climate for FinTech in India. But of course, it's not without any challenges that are there, because with respect to not to match the speed of innovation in the sector, we also have to ensure that it is going to be secure and going to enable good growth also. So that's a major challenge. Those are several FinTech startup things are also there. So what I would like to conclude with this part for today's session is also try to say that FinTech is having a great impact in wealth and asset management for individual or retail investors there. And it has also actually captured the imagination of various financial services firms. And they're now trying to see how they can differentiate the services by using the FinTech or the technology to accelerate the innovation. And what we find is they come up with new cost models. They're also trying to see how to enhance the customer experience. And everybody is coming up with new apps, design new frameworks, which will help the company to ensure that provide a platform for individual investors to enable them to manage their funds or the investments here. I think that's what fintech has made it possible to cater to the requirements of the changing requirements of the retail investors. Yeah. So what is there's the last slide is that fintech will change the asset and wealth management behavior here. Of course, as you all know, increase in digital payments is there, eKYC is now made possible. Online fund transactions are there, online statements of investments, and everything has been automated. So for the retail investors now, everything has become much more easy. It's not that like earlier it used to be very tough. And now the developments in technology has made things much more easier for someone to operate, invest, and also keep track of the investments there again. But if you look at in India, still one interesting thing is that as the government is concerned is that is the number of people who are actually making use of the banking sector is very limited still. Many of them do not come to invest in the stock market and the bond market, which means that still there's a big opportunity available for various players in the sector. If you can educate the people in different segments in rural areas, then there's a more opportunity for you to bring them also into the market here. And if you are thinking in terms of coming up with apps, you can target some specific groups also, which will start using this for the purpose of investment. At the same time, they're always looking for security and safety and also good return. And if you see both the Reserve Bank of India and the Securities Exchange Board of India, they've been very proactive. And then I also try to see that there's a lot of transparency is there and the investors are going to be protected. Because the main purpose is there is, yes, all these things can happen, but not at the cost of the individual investors. They want to ensure that it is safe, secure, and then the investors are not going to be, don't going to have any negative impact of these type of developments. So what we see is particularly wealth management firms or the financial services sector, firms started using a lot of fintech tools here, and they're trying to see in terms of how these tools can be used for trying to help the retail investors make the investments and as enable them to grow and thrive in the future here. So this is what I feel that the fintech sector has got playing a very significant role in trying to cater to the requirements of the retail investors. And there's a lot of opportunities are there. So I thought let's share some ideas on this. Maybe if there's any other specific things that you want me to talk about, then I can talk today or later.
Thank you, ma'am. That was a wonderful explanation of the website, of the all the stock market and a whole perspective of viewing finance as an industry. So the interesting question that was popping up again and again in the chat was that from where can students learn the investing part and how can they understand how the stock market works? Is there any platform that you would like to suggest, or where they can suggest they can invest but not with real money, like IQ trading or something? Is there a better platform that you can suggest for that?
See, for example, what you can do is also you want to understand about investments and everything. Because the National Stock Exchange website is there, where the exchange also wanted to educate the investors. So there is they have come up with various modules which provides you inputs in terms of what are the developments in market, how things are happening, because they want to educate the investors. So maybe you can begin with looking in terms of the National Stock Exchange website, and many of them are free downloads for you. Of course, they have certification and all. If you want, you can go in for certification, or otherwise you can just simply go through that. You can begin with National Stock Exchange, look at in terms of BSE, because one of the main purposes for them to try to ensure that the investors are going to be educated. So they provide all this information to give you a basic part. Of course, there are a lot of books are there in terms of how to go about making investments. You can look at books titled by Security Analysis and Portfolio Management or Investment Management books to understand in terms of how do we go about making the investments. And if you want to have a portfolio of investments, how to develop my own portfolio, and how do I evaluate whether my investment is giving adequate returns or not. We can do that, but we can also refer to the books also. And other thing you were asking is, okay, about investments, and then where, of course, you can look at bank-driven online retail investment options. You can open a demat account with this linked to a particular bank. I think then that is much more reliable in the initial period, so that you feel confident about it. Open a demat account and then start investing there. That will be a good thing for starting.
Regarding that, thank you, ma'am. Regarding that, the second part question is, many students of finance are afraid to start their trading journey just because that they have a fear of making loss or a bit of misinformation. So is there a way they can practice trading without actually getting into the field? Like stock grow, or is there any other?
Investment is different from trading. Whether investment is, maybe you're looking in terms of long-term investment, then the type of strategies you need to follow is different. Trading is short-term. On a day-to-day, whenever there's an increase, maybe I sell it, and there's decrease, I try to come buy it. And then maybe you anticipate it will continue to increase after short immediately. You have to make the assessment and then you do it. So trading, the strategies are different, and investment strategies is slightly different. So you decide what is your purpose. Based on that, you can go in for making, if it's a long-term investment, or for trading there. That's how you should focus. How do you begin this? Also understand what are these mutual funds, what do they do? Maybe you should also look at in terms of understanding the mutual funds in India, what are the different types of schemes and how they have been performing over a period of time. And that will also give you a little bit of insights also to which one to choose in the initial when you're making investments initially.
Excuse me, ma'am.
Hello, ma'am.
Yeah.
I wanted to ask a question, that is, why one should become a trader rather than a long-term investor? Because if we look at market standpoint, because of daily traders, market is operating, but the data is most of the traders lose their money. So why we should not focus on long-term investor and get into trading? And if we look into the market standpoint, if more traders will come into, market will boom more.
Yeah. Okay. I mean, I'm not saying. See, when I am buying from the market, I buy with a view to sell it immediately or to hold it for some period. So I think that's where the difference is. So I'm saying any investor will be always trying to buy from the market here, but then the timing at which you're going to sell. Sometimes I buy today and sell tomorrow. So then it is short term. And then I buy, observe, and then I try to sell it after a certain period of time, then it becomes a long term. So if my purpose is to try to make short term gains by way of looking at how the prices are going to change now, then in that case, it's going to be basically only for your short term trading. So, but that you have to decide which one you want to choose.
And you, ma'am, you also talked about fundamentals and technicals. If we look at the current situation, there are lots of companies which have good fundamentals. Like we look into HDFC Bank, Kotak Mahindra Bank. They are good fundamentals, but their stock price is not moving. So what we should do? We should hold on that kind of companies, or we should put our money in some other kind of company.
The fundamentals are strong. See, if the fundamentals are strong, what you do is you invest and wait. Sometimes you can even hold certain scripts for about 10 years, 20 years, 50 years also. I've seen many people like to hold the Bajaj Auto shares. I mean, it's for several years. They know that, yes, and it's appreciated and is given a good return also. They're good investments there. So, so it is also, for the fundamentals are strong, then in that case, it is a good one to hold for a longer period. That's the promise.
Ma'am, can you share your views on quantitative funds? As I am a new investor, this concept is very new to me. So, how it has disrupted the market, and what is its future? Can you please share your views?
In recent times, quantitative funds, smart beta funds, and all have come in, and they are actually making a big way. And there's a good option for you also to choose in comparison to the other funds there. So different schemes are there, but though it is not that very popular in the Indian market, I think both product and funds, smart beta funds are limited. But still what we find is, yes, they give you a good return comparatively. So if you are interested, you can also look at that. There are a lot of even ETFs are there, exchange traded funds are also there. That's also something which you can look at for making your investments. So if you're familiar with these concepts, then I think you can also look at these segments for you to make investments.
Thank you, ma'am.
Hello, ma'am.
Mm.
Ma'am, I have a question. It's a general question. Actually, I'm a foundation level student, and I have studied investment for 2 years, and within 6 months, I have made 20% ROI. And now, as I am doing this course, along with this, I am also doing a BTech.
Okay.
So my question is, should I keep on doing the intraday trading, or I should do the step up SIPs instead of doing the intradays?
Okay, since you have been doing it, of course, good that you have been making a return, but you must also be ready when you're making good returns. You must also be ready to face when there's going to be a loss also. Be prepared for it. But otherwise, I think there's nothing wrong in doing intraday trading, but be aware when to do it, how much to do it, and when to come out of it also. Or maybe when it comes to your investments, sometimes there's a lot of force within yourself to start investing more and more into it. So maybe you have a proportion of it. Okay, I say whatever the limited savings that I have. Okay, I go in for 50% of a trade on intraday trading, 50% for long term. So that way that you balance it out. So that it's better.
Yes, ma'am. And I also diversify my SIPs, and I do a step up SIP.
Yeah, SIPs, I think it's a very good thing, and particularly start now. And you will definitely see the benefit of it, not now, after 10 years, 15 years, 20 years. You'll see it is really a very big saving. And the appreciation will also be there. The earlier you start putting in SIP, I think the returns are going to be much.
Okay, ma'am. Thank you, ma'am.
Yeah. Good evening, ma'am. It's my turn now. Am I audible?
Yeah. Yes.
Yeah. Thank you, ma'am. Thank you for the session. Ma'am, just only one question, ma'am. How this course, like data science course, can help us, in taking a better decision while trading or doing investing. Okay, in this course, we are doing many other things also, but there are many dedicated courses like Certified Quantitative Finance and Indian Institute of Quantitative Finance. They are giving, well-directed course, for application of data science in finance. Why I'm asking this question, let me give you a background of this. Like, just a second, I think.
Your voice is breaking. I didn't get you.
No. Am I okay now?
Yeah. Okay.
Yeah, let me give you some background behind this. Like, say, for example, we go for medical diagnosis, right? And we come out with health report, right? And if we go to 3 or 4 different doctors who are relatively competent enough, they will tell the same thing. But the moment you take the health reports of any company, like annual statement, profit and loss balance sheet, and cash flow statement, and you go to 3 or 4 different finance professionals, they will give different insights. Someone will give buy, someone will give sell, right?
Yeah.
So how data science course may help in making a right decision? Hope you got my context, what I'm trying to say.
See, in the stock market, when you are, there's one who thinks that the price will go up and another one who thinks that the price will come down. That's correct. You can operate in the market. So the perspectives will be different.
Correct.
And that is why the market is also growing here. But then from your point of view, I think you look at terms of, but what I found in practice is you can look at the advice given by others, but you develop your own model. With your experience, what I have found for a prudent investor is they come up with their own model for investment. At one point in time, when I developed a lot of prediction models, I thought many companies can use it. But then when I approached many mutual funds and other fund managers, I think each one would like to have their own model. They don't want a standardized one. Because the assumptions and the strategies are slightly different. So they don't want a standardized one. So everybody comes up with their own one. So that's why with respect to your requirements, your risk level, You have to come up with your strategy and see what will work for you. What works for you will not work for me. What works for you will not work for others. So it is for you, the individual, you have to think, decide based on your risk profile and based on your requirements. You have to come up with what will be the best way to invest.
But so, ma'am, this is the point which I'm not able to decipher. I completely agree with you that the underlying principle of the share market is that two people will have different perspective or different viewpoint, then only a transaction will happen.
Yeah.
Someone will have buy mindset, someone will have sell. Otherwise, the market will be unidirectional, right?
Yeah.
Either buyers will be there, sellers will be there. Like upper circuit will be there, lower circuit will be there, right? But my point is this: that on one side, when we say that data don't tell lie, right, and data will give you good insight, then why two professionals are making different decisions referring the same data point? That's my that's
because
the paradox.
Assumptions are different.
That's the paradox which I'm not able to crack.
So when I am developing the model, I try to find out what factors will drive it when I predict it. It depends on the parameters and the variables that I use for the purpose of prediction. And also the type of the model that I use also. That is why, see, for example, you have been doing a lot of data analytic tools, data in AI and machine learning tools. You can use the different techniques and also try to develop different models and find out the best model which one gives you the best prediction. And sometimes the model which gives you best prediction may not give you the maximum profits also. So maybe you also have to test your models and see in terms of which model is going to give you the maximum returns. And there are, when it comes to, again, for investment, there are some who always looks in for whether my model will predict the increase in the price so that I can maximize my gains. There are some who look in terms of where I don't want to make any loss at all. So the strategy should be to minimize my loss there again. So depending on your purpose, you can also see in terms of developing the model which will suit you. So same data set, but depending on your purpose, the model will try to give you what you are looking in for. In this course, we have not come across any module so far where we have studied about application of data science in finance. Hopefully, it will come in reinforcement learning or what, I don't know. Yeah. Yeah, there are different techniques are there. So, for example, I have developed. You can also see from our website we have developed prediction models using. Initially, I began with looking at neural network can be used for predicting stock prices. And later on, we also try to see how this can be used for, it's a nonlinear model and how it can be used for also for investments also in the stock markets. Later, we also try to test it with different types of neural network models. Are there different algorithm and whether that makes a difference and giving the returns. We had some tentative strategies and then we try to test it out. Later, we improved the neural network model by bringing in new search engine search algorithms like genetic algorithm, I think, to improve the model and then make the prediction. And we also try to, I think in one of my work with, where we also try to look at is come up with different types of strategies. And where through the model, we will try to look at we came up with some 50 strategies for investments. And we also want to see in terms of which strategy will work at that point in time and give me the maximum return. So you can see in terms of, okay, you know the techniques, and then you have to use the technique and then try to develop the models for investments. So you know in terms of what factors are important when making investment and how to evaluate the investments, what is the portfolio, learn that and now combine these two. And then you can update. Okay. Which website, ma'am, which you are referring? Which website? Yeah, you can look at my profile in the IIT website. My papers and my publications are there. You can read some of them. Okay. Thank you, ma'am. And thank you, sir, for sharing the link on the WhatsApp group. Thank you.
Sure. All right, Ganga Prasad. Thanks for attending the session. So I would like to give this message to everyone. The link of our membership WhatsApp group will be shared soon enough on the Zoom link description. So we will suggest to join that or to be ready. So and also thanks a lot for Professor for joining us today. I don't want to disrespect, ma'am. So can you please spell your name because I don't want to disrespect the spelling. Thenmozhi, am I spelling it correct?
Your voice is breaking. Okay, my profile. Okay, I'll just share 1 minute.
Yeah, we will share your profile in the DOMS
Yeah, let me see.
section of IIT Madras, right?
Yeah. You can go to IIT Madras, DOMS at .iitm.ac.in.
Yes.
And you
You
can
will
look
see
for my
that in the
profile. Yeah.
chat box.
Yeah.
So one last question before we end this session, ma'am. What is the effect you see in the decentralization of the financial world? How these, for as of now, all the world of cryptocurrency, blockchain, and NFTs is really volatile. We also tried to create a algorithm for our hackathon once, and as we compared the data from the stock market and the FTX exchange, which was prevalent at that time, now it is not. So
did
data
you find that crypto you cannot predict it on? No?
yes, it was the difference of moon and sun now. So we just couldn't make any sense out of that data.
Yeah.
Now, I guess it was 1 year back, last year. So I guess there would be some sensibility which has been established right now. But how you see the change that will be happening in the decade or so in the world of finance?
So I think we also did some development of models for crypto prices. But what we found is, yes, prediction based on past, it is not working out. The models are not effective at all.
Yeah.
So when you find that the past values are not having an effect, it means that it is a function of something else. So you have to look at in terms of what other factors are related to this. And then maybe you develop a model using other factors. See, it's not always, it is only the past prices will have an effect. And past prices are not having an effect, which means that yes, every day, today's price, tomorrow's price is going to be a function of today's price because they're at random walk. That's what is applicable here in the case of crypto. But you can look in terms of the relationship of crypto to other factors. When past is not explaining it, which means there are other factors which is driving it here. So we have to identify what other factors drive it, and then maybe you can develop a model.
And how the blockchain can be used by different countries because blockchain technology has been appreciated even by RBI governor and many parts of our government as well. And throughout the world, it is being appreciated that it improves the privacy, it gives rights to the users and everything. So how the countries can take part, like China is creating its own cryptocurrency. India is also in the process of creating the merchandise access has been there, I guess. So how the blockchain developers in which field they can see their future in the coming decade?
See, actually, blockchain is opened up a big opportunity for doing several things. And I think there's a lot of scope also. I think we have not fully utilized it, and people are also trying to experiment as to how it is, how it can be used, what are the ways by which it can be applied here again. But I think there's a lot of scope for you to look into it and then try to see in terms of how it can be used here. But I think it's just a lot of experimentation is only happening, what I see now. And there is a lot of potential is there, and can be used for different purposes and different applications. Okay.
Thanks a lot, ma'am. Thanks a lot again for agreeing to be on this session. The session was wonderful and the insights were amazing. I hope all the audience and all the members, all the future members will be amazed by the information that they got from this session. So I would like to hand over the stage to Prati for the comments on this session.
Right. Thank you so much, ma'am. This evening couldn't have been better.
So good.
Thank you so much.
So wish you all the best.
Thank you so much, ma'am.
Thank you so much.
Thank you, ma'am.
And also,
We got very
thanks a lot
late
to
information. We got very late information for this session.
Yeah, ma'am. Thank you to you. It was nice to understand bio.
Yeah, good. Nice talking to you all. And wish you all the best.
thank you, ma'am. And thank you so much to all of you for sticking till the end. And I'm pretty sure even though some of you joined at the very last moment, you made it, right?
Yes,
And
definitely.
another thing, I'd really request all of you to fill in the feedback form and let us know what you want from our future events, what you want sessions to be on, or any other thing that you have in mind, do join us. And with a heavy heart, we have to end this as for now, but not for a long time. We'll see you soon again, right? Thank you so much for coming.